This is Matt Russell from the FX Power Course, and welcome to the Daily FX Walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and let me go in order here, and this is the daily chart. This is a simple support line that I've been using for the past, I'd say, 10 reports or so now. As I mentioned in yesterday's report, prices were rallying off this this bottoming pattern right here, and we did have a down day in the pair. So moving forward, as I mentioned yesterday, I might stay in the trade, assuming you initiated a long trade against these lows right here. Now, if you were flat, listening to the presentation yesterday, again, our stop would be located beneath that 87 low. So what we might do over the next 24 to 48 hours is wait for prices to get maybe near that 88 figure, and then we would go ahead and place a stop maybe about 87.80, 87.70 area. And again, this could just be a 1-2 right here, and prices could very well find support near that 87.85 area. Moving forward, the next chart is the Aussie Kiwi, and as I mentioned during yesterday's report, bearish against the high of the doji candle. And again, this is zoomed in. Let me zoom out a little bit to give you a little bit better perspective here. We did have prices bounce off that 38.2, and now prices could be forming a double top again using the high of that doji candle, and the high is 129.36. So during yesterday's session, prices didn't really get close enough for me personally to justify an entry, but you know, individual traders, their risk parameters could be different, so hopefully you were able to get in. But again, the key thing here is where our stop will be located, and that's the basis of the trade. And what we will do if we are flat is just wait for the next few days here to see if we can get an entry close to that 29. What is the high again? 129.36 high again to justify a favorable risk-reward trade. The next chart is the Pound Swiss, and as I mentioned yesterday, I would abandon this short trade idea with a close above the 69.50 area. That is exactly what happened. So I would kind of put this trade, put this pair on the back burner for a little bit here. But again, the clearest technical indication I see is the simple support line, and we might just wait now for prices to come down and test that line. Again, this is something we would keep on the radar screen over the next few days. The next chart is the Euro Swiss, and not much has changed here. As I mentioned yesterday, we had, let me zoom out here and get the broad perspective. We do have the simple resistance line that I'm waiting for prices to come up and test, which is just beneath that 154 figure. We did have the bull flag pattern form. Prices did break out, but as I mentioned yesterday, the breakout has not, there hasn't really been any enthusiasm with the breakout above the bull flag pattern. So again, what I might do here, I really don't have any bias here in the short term, waiting patiently for prices to come up and test that longer term resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.